Welcome to the Aim High Podcast. Today we've got a special guest, Dave Foster. Dave's going to help us navigate the world of 1031 exchanges. If you're not familiar with a 1031 exchange or what it is, don't worry, we've got you covered. This section of the U.S. tax code allows you to defer taxes while selling investment properties and reinvesting the profits into new properties. Dave's going to share his expertise and help us understand how to execute a successful 1031 exchange, from planning ahead and getting to know your timing right to identifying the, yes, air quotes, like-kind properties. By using 1031 exchanges, you can optimize your investment strategy and watch your wealth grow through tax deferment. It's a game changer. So whether you're a seasoned investor or just starting out, this episode is packed with valuable insight and actionable advice to help you take your portfolio to the next level. So stick around as we explore all this and more, where we provide real estate investors with the tools to achieve generational wealth. Let's aim high together. This is episode 76. Hello and welcome to the Aim High Podcast. I'm your host, Bud Evans, and today we are going to jump down the rabbit hole of 1031 exchanges with Dave Foster. Hi, Dave. How are you today?
Hey, bud, I am doing awesome. Ready to jump down that rabbit hole with you.
Hey, anytime somebody says to me, hey, we can save money in taxes, I'm like, let's go. Let's go. Dave, could you do me a favor and give me a quick introduction?
Yeah, I'm, I guess what you would call a frustrated serial real estate investor. I've never met a deal I didn't want to do, which of course the wise people will tell you, it's not the deals you don't get that kill you. It's the ones you do get that you shouldn't have. But regardless, I've spent a lifetime just living in real estate, all different types and avenues of it, from rental to development, commercial. I've loved it all along the way. But at a point in my life, more years ago, I want to admit, I discovered that I was making a huge mistake by not taking advantage of this thing called the 1031 exchange. And my very first mistake 30 years ago with that cost me $30,000. Now, that doesn't seem like such a big deal, right? That was $30,000 that I paid in tax 30 years ago that I didn't have to.
Yeah.
And everybody now knows how to compound interest, right? What if I kept that 30,000? So that haunts me to this day. But that's what I do. I invest in real estate. I help others, and I love the 1031 exchange.
Listen, can you just do me a favor and quickly go into what is IRS code 1031?
Yeah. Hey, it's this thing that nobody knows about, right? Because the IRS is not going to advertise, here, do this and you'll save taxes. And quite frankly, the people that do know about it, the ones like me are these nerds who we like to go 2 miles deep in a 2-foot wide creek. So here's a 100-year-old statute of the IRS that people today still don't get. In a nutshell, it allows you to sell investment real estate that you have either depreciated greatly or has profit that you made or will make, and you sell that and purchase new investment real estate that's positioned better for you. Maybe it's bigger, smaller, more cash flowing, whatever the reasons are that you want to go into it. By using the 1031 process, you get to indefinitely defer paying that tax on the profit. So in my case, that $30,000 would have gone to buying more real estate, which would have made more money for me. And then I would have made more money off the money that I made by not paying taxes, so forth and so on. And I think that's really in a nutshell what it is, bud. It's that easy to understand. Now that's 2 sentences in a tax code, and it's 8,000 pages of tax law.
Mm-hmm.
But that's the opportunity that's there. And we've taken advantage of it, like I said, for all of our career. Ended up moving our portfolio from Colorado to Connecticut to Florida along the way over the course of 10 years because we had a dream of living on a sailboat. And I was a Kansas farm boy and she was a Minneapolis city girl. And there wasn't any ocean in Denver. So we said, let's become real estate investors and get out of Dodge. And over the course of 10 years, we managed to move an entire portfolio to Florida. We managed to buy a 53-foot sailboat with tax-free dollars. And then we lived aboard and raised our 4 children, living off our vacation rental portfolio. It was a beautiful time, all because of Section 1031.
Great. I'm just going to ask you real quick if we could go through the process, if you don't mind. Let's say hypothetically, I have 10 properties that I'm going to sell and I put them all together in a portfolio and I want to sell them to somebody. How does this process work?
So you want to think of the 1031 exchanges backwards from what we normally think of. In real estate, we buy real estate because we're trying to get the best price, then we go and sell it. The 1031 is the exact reverse. 1031 is going to start with a sale of your old property. Now, in the case that you're talking about, where you've got
Mhm.
multiple properties, maybe you're selling those as a portfolio altogether. You're going to be considered one property. So you're selling one property that consists of several, and you have to have, this is so critical, the qualified intermediary for your 1031 exchange has to be in place prior to the close of that sale. We have to document the exchange on both ends on the settlement statement, and we have to hold your money. The IRS does not let you touch the money in between. So that one's critical. Miss that first step, your 1031's done. But what you're going to do is the sale's going to close. You start your 1031 exchange. You're now under two timelines. You've got 45 days to identify your potential replacement property, and you've got 180 days to close. Now, just like you can combine several properties into a portfolio to sell, you can buy different numbers of properties as well. So if each of those 10 sold as 10 individuals, that would be 10 individual 1031 exchanges. But you could still combine to purchase one larger property. And a lot of times people will do some math on that. This is an aside, but it's a good tip. People do some analysis and they'll realize that they can sell their properties as individuals at a higher price, the discount they have to take by selling a portfolio. And what's important to know about that with the 1031 is that's perfectly fine. You simply have to be able to meet the timelines with your replacement property for all the properties you sell. So the key then is just sell them all closely bunched together. And then you can use the proceeds to go purchase your new property. So whether you sell as a portfolio or as individuals, you can still buy that larger property. You could sell one property and purchase multiple properties. The 1031 exchange only cares about the amount. And as long as you're purchasing at least as much as you sell, and you're using all the proceeds from your sale in the purchase or purchases, you'll still defer all tax. So you tend to see the opportunities there to stay in the demographic you love. Maybe that's lower end $200,000 houses. Sell a $400,000 house, buy two $400,000 or two $200,000 houses. That could be, again, a great way to use the 1031 exchange. So it's got to be investment real estate. You've got the two timing requirements. You have to use a qualified intermediary. We always have to make sure that the taxpayer from the old property stays the same. So you can't purchase in a new entity.
Okay.
Or if you're like a lot of people these days that you're wanting to go more passive and what you want to do is go into a syndication, many
Mhm.
times that's difficult because when people are purchasing into syndications, they're not buying actual real estate. They're buying a membership interest in an entity that owns real estate. And that won't qualify for tip 31. So there's some special things that we might have to do in that instance. But as long as you pay attention to those six, as long as you've got a QI who's acting as your guide through the mines of Moria and this whole statute, then you'll indefinitely defer all tax. And as long as you own that property, you'll never pay tax. As long as anytime you sell that property and do another 1031 exchange, you'll never pay the tax. Even if you buy a property, let's say it's a vacation rental, you'd like to use some for yourself. Where do you guys like to vacation, bud? Any particular place?
Aruba. Yeah, Aruba. I love Aruba.
Okay, you're right.
Let's say,
Not the really awesome.
let's say Key, Fort Lauderdale.
There you go. Someplace in the United States, because that is
There
something
it
else.
is.
Is the
Yeah.
1031's only U.S. property for U.S. property. So Fort Lauderdale, use some of your 1031 sales, go buy a vacation rental in Fort Lauderdale. You're allowed to use it some yourself. That's exactly what we did moving to Fort Myers. We lived on the boat, but whenever we came back to town, we just packed a duffel bag and went to one of our vacation rentals. As long as you continue to own those properties at 1031, you'll never pay the tax. And check this out. There's two things that I want to tell you that are so awesome. I'm taking advantage of one of them. The other one's staring me in the face and I don't like it, but you can convert 1031 properties into your primary residence. And that changes
Okay.
the whole ball. If you're aware of it, the statute for your primary residence is section 121. That allows you to sell a piece of property you live in. And if you've lived in it for 2 years out of the 5 prior to selling it, then you can take the first, if you're married, $500,000 of profit, tax-free. No need to reinvest, no nothing, tax-free. And you can do that. A lot of people don't know this. You can do that once every 2 years. So guess what the absolute, in spite of what some of these big gurus will tell you, guess what the absolute best investing strategy is for real estate? Buy a house, move into it, live in it for at least 2 years, and then sell it. Every penny of that is going to be tax-free. And you can do that your entire life. Here's where 1031 and 21 kind of confluence. You sell, say you're in Cincinnati, you're ready to retire, you bought all your rentals in Fort Lauderdale,
Mhm.
and you're ready to go. The last thing you do is you sell your house in Cincinnati. That money's tax-free. Where are you going to move? Into one of your former rentals. As long as you own it, you don't pay the tax. But now the clock is ticking, and some of that gain is being converted from tax deferred into tax-free every year. I have a client on St. Pete Beach that bought 3 identical condos almost side by side in a 1031 exchange. He moved into the first one, converted it. Once he had lived in it for 3 years, after renting it for 2 years, he sold it. He had owned it for 5 years, lived in it for 3, so he got 60% of the gain, tax-free. Where do you think he moved, bud?
One of the other condos?
Next door? Oh, yeah. What an awesome strategy in your return to actually start to eliminate some of that tax. So I absolutely adore that strategy. Now, are you ready? This is the second best one. And you'll
Go.
hear why. Because the second best strategy, which I'm not interested in, but I'm getting there, is die. And that's because when you die, your real estate will go to your heirs at what is called a stepped up basis. So you don't pay the tax, your estate doesn't pay the tax, your heirs don't pay the tax. It truly does get wiped out. So simply by dying, you're handing your children or heirs or the Humane Society a tax-free legacy. How awesome is it? The only problem is what you've got to do to get there.
Yeah. What is that? Die.
You have to die.
You have to die. Yeah. So, so Dave, I got to ask you now, what is the timeline on a 1031 exchange? If I want to sell my property and I come to you and okay, this is what I'm doing. How much time do I have?
Yeah, the clock is gonna start ticking with the date of the closing of sale.
Mhm.
You have 45 days to identify your potential replacements, 180 days to close. That's it. Now, the 180 is usually not so much of a problem. People get very freaked out over only having 45 days to find their new property.
Mhm.
There's a couple easy answers to that. Number one, although it sounds scary, the reality is, even in the tightest market a year or two ago, 93% of clients were completing their exchanges. So it feels real scary, but it's not all that bad. Second thing, though, is That's you only have to close your sale before closing your purchase. So a lot of our clients will counsel them to get their new property under contract before their old property closes. So
Mhm.
that eliminates a lot of that risk. As
Right.
soon as they get a contract for their sale, they're shopping, looking to get their new property. The other thing that does is by bunching your sale and your purchase close together, you're shortening the amount of time you're going without a paycheck because the quicker you can get that second property into service. So most people will find that they'll have 60 to 90 days. And if you're doing something like moving into a sector like from single family to, say, commercial, it's very possible to do that because the commercial or multifamily due diligence timelines are usually
Mhm.
much more extended. So you've got a lot more time to be able to get your 1031 put together and get that old property sold.
Yeah. Okay. Yeah. That's great. And that brings up another question because I've always been told that when you're doing your 1031, that there has to be a like kind. And I never really got that. What exactly does that mean?
Yeah, that's one of those weird IRS speak words. Like kind and qualified use are the two
Mhm.
terms. Like kind simply means that it's real estate. That's it. It just has to be real estate. All real estate is like kind to other real estate, commercial, residential, raw land, industrial, cell towers with a 30-year lease, oil and natural gas wells down here in
Okay.
Florida, boat docks that have been condominiumized are real estate. As long as it's real estate, and that's a weird topic, it's like
Mhm.
kind. The other term, qualified use. That means real estate that you have owned with the intent of holding it for productive use in trade, business, or for investment. So the two types of property that really don't qualify as qualified use, your primary residence, because you're not holding that for investment.
Right.
Although remember, the rules are much better for that one.
Mhm.
And secondly, fix and flip properties or construction where you're the builder. If you're building something simply to sell it, if you're buying something simply to flip it, doesn't qualify for a 1031. Got to be
Okay.
property you intended to buy and hold.
Dave, I have a follow-up question about that because I know people that are they're new. The new sexy is buying a lot of land and doing a ground up development of a 2 unit, 3 unit, or 4 unit. And are you able to 1031 if you're doing a ground up development with the purpose of renting those units out?
Yeah, absolutely. Now, the issues there are that you cannot exchange into improvements on property you own, but you could certainly use the 1031 exchange to sell a property that you've held for investment and buy the land. Or there is now we're going to get into deep weeds for a quick second, but there's a process called a reverse exchange where we would take title to the lot. And while we are entitled to the lot, you then are improving it.
Okay.
But we can only hold that lot for 180 days. So for
Okay.
ground construction, it's pretty tough to get done.
Yeah.
But a lot of people that are buying, one of the other things that's very popular is to find those multifamilies that need value add. So let's say you're selling your property for 500,000 and
Mhm.
there's a $300,000 multifamily you want to buy that needs a couple $100,000 of improvement. We could do a reverse exchange where we take title to that property. And while we're holding it, you put $200,000 more into it in improvements. Now, what's it worth? 500,000.
Mhm.
That's what it's worth on paper.
Yeah.
By adding that 200,000, you probably boosted it up to 7 or 8, right?
Yeah.
So you sell your property for 500,000. You're buying this property that you were able to improve for 500,000. That's literally worth 7 or 800,000 the day you take title to it. Best of all, you never paid a penny in tax.
That's amazing. Okay. Yeah. Now, what about let's talk about where people screw up because we want to make sure that we're adding, not only we're providing the value. Hey, we got Dave Foster, who's later on, we're going to give your information out so they can reach out to you. But what are the things that you see? What are the pitfalls that people jump into and screw up the process?
I would say the very first thing that'll get you is by not planning sooner rather than later.
Mhm.
Just like every other life decision, you're going to benefit from more time to make it. So you don't, although people do every day, they call me up and say, I'm closing tomorrow. Can you do it? Yes, we can do it. But it's better for you to call me 3 months before and start planning because it's going to help you to define your parameters, where you're looking, what you're wanting to do, make sure your strategy in place. So not giving yourself enough time to plan is huge. I get calls every month from people who tell me, I just closed on my property last week. The money's at the title company. I want to do a 1031 exchange. Well, that's great. You want to, but you're not gonna because the qualified intermediary has to be in place before your sale. There's just no give on that.
Yeah.
So other practical things, the folks that I see fail usually almost always will fail only because they were not focused enough on their strategy and it was too broad. Instead of thinking, I want to look in the Oklahoma City area for a multifamily property in this price range, they're telling me things like thinking about maybe condos in San Diego or a 2 unit in New York. And really, I'm not opposed to vacation rentals as well. I'm thinking multifamily, they're all over the map. In 45 days, they are never going to find the right property because there's too much analysis.
Got it.
So those are the big keys. My greatest advice when people are scared of this is to remember two things. Number one, the 1031 exchange exists to let you compound
Mhm.
using the government's dollars to make money for yourself. So whether it's 2 days or whether it's 30 years, every which you can get with that compounding is a benefit to you. So people will say, I don't want to start my account, told me not to do it because it's complicated. You're going to have to pay the tax anyways. Like you and I just showed. No, you don't have to pay it anyways. And I'm sorry, I am an accountant and I got no sympathy for a CPA that feels that filling out one form on one tax return is a hard complication for them. That's all it takes.
Yeah.
But here's the deal. The backside of that is never, ever do a 1031 exchange if you're not buying the right property. We have people that will start 1031s. They have every intent of doing it. But if they can't find the right property, don't buy a bad property.
Mhm.
Let it go. You'll lose the compounding at that moment, but you're not going to lose money because nobody ever went broke paying tax on profit. It just feels like it. So
Yeah.
if it's not right, don't finish the 1031 and let it go. Start over again with your next property. You don't have to force a deal. As a matter of fact, there's no penalty for starting and not completing an exchange. If you don't complete it, you get your money back. You pay the same tax that you would have at the same time you would have. So for a small price of an exchange, generally it makes a lot of sense to go ahead and attempt the 1031.
All right. Dave, thank you very much. I appreciate all that. Listen, I'm going to ask you a few questions. I'm going to ask you one question, then we're going to go into the soaring four, which is the same four questions I ask every guest. But as your wealth increased, what is one thing that you learned?
Wealth isn't forever. We've made and lost several fortunes,
Mhm.
and you just have to understand it's not forever, so you plan accordingly. Because wealth doesn't last forever, I can also tell you this, the second million is a lot easier to make than the first million. So for those of you who are working on that first one, hang in there. You're going to get there. For those of you that are working on your second million, I refer back to the first one. Remember, it ain't forever. So plan accordingly.
Yeah. Excellent. All right. Dave, we're going to go into this four. These are the same four questions that I ask every guest who can help someone who's just starting out achieve new heights. First one is, what do you use to keep you motivated?
Helping others. My motivation now, we've actually converted our whole business model. We're doing the 1031s for other people, of course, but we're also investing with our younger relatives. I am so appalled at the level of financial education that children are getting today. It's just so sad. They're coming out of it, they're moving to the land of the sharks, where we all know what we're doing, and they don't. How can we expect them to succeed? So we're starting to develop programs where we're working with our younger friends, relatives, young people that we know to develop financial literacy, help them start to become real estate investors themselves. And that's all about giving back. And the satisfaction that I get when I see someone else succeeding because I helped them is way more than I ever get watching a check deposited into my bank account.
Yeah, that's awesome. Yeah, I fully agree that the lack of financial training that our kids are getting, not only at school, but a lot of them at home, it's a travesty. Uh,
Yeah. This will date me, bud. But one day I once said to someone, I agreed. They said, just what you did. I said, yeah. I said, none of these kids even know how to write a check.
yeah,
And then I had to stop and realize, wait a minute, nobody writes checks anymore. I'm already dated.
yeah. Venmo or Cash App. That's it, right? Nobody
Exactly.
even balances a checkbook anymore. It's automatic. So, what is one thing you learned that changed your mindset?
The day we had our first child, we had been all about growing our careers, living the pressure cooker life. The day I had my first child, I realized two things. Number one, I wanted to spend the rest of my life, every moment I could,
Mhm.
with my children, my family, and my friends. Work became very secondary. And secondly, along with that, I realized that time is my most valuable commodity. And it's not about making more dollars. It's about maximizing that time to do what's important to you with.
Yeah, thank you for that. That is probably the most brutally honest answer that anyone's ever given. 75 episodes. That's absolutely
You-
true. What are some tools that you use to keep yourself on track?
As far as the 1031 goes, what I've loved is how we've been able to incorporate things like Calendly, automatic
Mhm.
schedulers, because everybody's going 50 different directions
Yeah.
so fast. And I see the chains. Anytime I could get together, when would you like to get together? I get together anytime. When would you like to? And instead being able to provide people automated tools where with one click, they can set the appointment, they can see what's available,
Mhm.
set the appointment. Same thing's true with calculators that we've tried to provide to let people do as much resource work as they can before we get involved. Because I guarantee you, there's a lot of people, you and I are probably a couple of them as well, where it's 2 o'clock in the morning, you wake up thinking, did I run the analysis? And you jump on the computer. Wow, how nice to be able to have some of our tools to be able to do that. So, although, as we were joking, I'm a real Luddite and I'm so technologically incapable, I love learning it and using it.
Yeah. Great. And then one last question. What is one thing that you would change if you had to start all over?
I'd marry my wife earlier. We've been married for 34 years. She's the amazing Vicky Foster for a reason. And I would just, again, it goes back to time, doesn't it?
Yeah.
There's no amount of time that will ever be enough with my wife.
Yeah. Yep. Fully agree with that one. I couldn't go back any earlier. I met my wife when I was 17. So we've
Uh,
been together ever since.
for
Been a
you.
while. Yeah. Right. Dave, listen, you are an Amazon best-selling author. You're an intermediary and save people a lot of money. I really do. Thank you for your time. I know that you're busy. If somebody wanted to reach out to you, how would they do that?
Yeah, the best way is to go to our website, the1031investor.com. Everything you need to get in touch with us, to prepare you, to educate you, it's all right there. And I think you're going to put the link to the book of the show links. All the
Yes, sir.
stuff we talked about today, the strategies, are all in that book. It's not just nuts and bolts. That's boring. It's how to use it to
Yeah.
get to where your dreams lie.
Yep. Tax code's like 1,200 and something pages. The first 600 pages are how much tax you're supposed to pay, and the other 11,400 pages are how not to pay the first 600 pages.
Ain't that the truth? You know what's really interesting though, bud? If we've got a couple minutes, I'd chat
Yeah.
about this because it's really groundbreaking. A mentor once told me, stop thinking about the tax code as the government's way to get your money.
Mhm.
Start thinking of it as a behavior incentivizer, where if you behave in a certain way, the government will reward you.
Mhm.
Now, I put that in perspective, 1031 in my head blew up. But that makes total sense. Because when 1031 came into play, we were just starting to grow our nation's agribusiness. And there were a lot of farmers that had their little 160-acre homesteads, but they could not buy a bigger farm because if they sold their first one, they had to pay too much tax and couldn't afford the bigger one. That's why 1031 was put into place to give people the opportunity to buy bigger, buy more, because not only did that let them grow, but all of those people that wanted to get into farming now had an entry level farm that they could buy.
Mhm.
1031 exchange does the exact same thing with real estate investors. It lets investors grow. It lets new investors come in. And that's so key. And what's the incentive? The government lets you keep the tax dollars to make for yourself. Isn't that an interesting way of thinking about it?
Yeah.
And the reason
And
why it's so key is right now, President Biden, I'm not sure when this is going to air, but we're now in late winter, early spring. President Biden just came out with his annual budget once again, going to eliminate 1031. Now, they failed every time they've tried it before.
Mhm.
And the reason is they want to catch all that capital gains tax because they think it's a rich person's gain, but it's not. The average 1031 exchange is a little under $400,000. That sounds like you and I, doesn't it?
Yeah.
Mainstream America. But
Yeah.
also, what they don't realize is that for every dollar of capital gain that they're going to get the tax on, which is a lower rate, that they're going to lose the tax on 2 real estate commissions, 2 title company closings, 2 real estate attorneys, 2
Mhm.
painters having to prepare the houses for sale and purchase. They're going to lose far more dollars in tax. And that's taxed as at a higher rate than capital gains. So the loss in actual tax revenue is much greater if you get rid of 1031. Let's not even start to think about all those people that depend on a healthy real estate economy to live and survive.
Yeah. That's a great point. It's that we employ so many people when we have these rental properties, property managers who are paying maintenance guys who are and all of the wage tax that it's we pay so much in taxes. It's absolutely silly. And at the end of the year, we don't pay as much income tax, but that's because we're paying everyone else's tax. Oh,
Right. Yeah. Yeah. We pay. We pay.
yeah, exactly. Dave, thank you very much for your time. I appreciate the extra effort and I will hopefully talk to you very soon.
Sounds great. Thanks for having me today.